Okay guys, so this here is your top down analysis. This is being recorded for the Telegram group. So if I'm looking at this area here, this is a monthly chart. When you're doing a top down analysis, there are some considerations to taking place, okay? And it's important to start from the monthly. Now, if I look all the way at where we are, what can we see about gold? And that is that we have been for years, since all this time here, we have been incredibly bullish, moving higher and higher. It's only really happened, as of the last couple of years, where we've started in fluctuating and changing our direction. But from 04, 02, all the way up to 2012, so 10 years of price action here, we have been pushing and pushing and pushing and pushing. And everything that happens on this time frame is fractal. It will be happening on smaller time frames as well. So when you look at the gold pushing all the way up, it had a very high expansion to the upside here, and then it came back down into this area here, into this imbalance, and then it pushed higher again. Price came down. The reason price comes down here after making at this point was an all-time high is because there is a lot of liquidity being built up in and around this trend line here. You look at the size of this trend line, it's going to have to have been taken out at some point. And that may be one of the reasons, obviously, gold has started venturing its way down. But when we look at what's potentially happening on maybe a 3-month chart, we might be able to get a bit more of an idea of what's going on, because when you look to the left of everything, it's very important that you kind of get an overall bias. So, let's go even higher to 12-month. We can see here we've had this small rejection and now we're just making new highs. So, back down to like a monthly time frame, the first thing you need to ask yourself all the time is, where is the money? Okay, where is the money? So, money comes in the form of liquidity, and you have to scour the time frames and look anywhere in your chart that you can find money. And that comes in the form of highs, lows, equal lows, previous weekly highs, previous daily lows, whatever. And if you're unsure on that, there is a video in this Telegram group which explains liquidity. So I can see here there's a wick and a wick. They pretty much line up together. I'm just going to draw that to make it more simple for me. And that there is liquidity right there. So looking at what the monthly time frame has done, I'm just going to label that as my liquidity. Looking at what the time frame here has done, we've pushed all the way high. We've created this liquidity here, and then we've dropped off to the sell side. Again, what have we done in the process? We've taken out all of this liquidity which laid here. So now I can get an idea of the reason we've dropped off is actually because we've taken liquidity. We had liquidity to grab, and where has it reacted? It's reacted inside this order block area here. It doesn't quite come down to this area, but it has filled in this candle here. So if we were to sort of scale down to another time frame, we'll probably get a better idea of what's going on in here. But in the meantime, we also need to consider, where is price in drawdown? So, at the moment, we're not really in drawdown here because we've come back in and mitigated, and you have to look for your institutional areas. So that is the last up candle before the down move that has not been mitigated into. So, like this order block here, we never came back, we never came back down to it. So it's definitely worth highlighting that candle right there. As where that candle there, the institutional candle, this is a down candle before price moves higher. It was mitigated into, so it's not in drawdown anymore. We haven't quite come this low yet, so we are technically in drawdown here. And one thing I can see as well is that we have got this liquidity here in the form of these little equal lows. So that might be a target for us, especially as we have technically sold off. It would make sense for us to drop off again. However, looking at this from experience, I am not looking for sells in this area. I am bullish on gold, and that is all down to something called seasonality. So seasonality is where typically every time of year, the gold and the assets, and they all move in a certain direction. Now, when you take into consideration what happens every single year, you get a certain time of the year in February, Valentine's Day, that is when gold is at its strongest. So I'm actually targeting this liquidity, even though we are technically bearish on the higher time frame. Now, on a monthly time frame, we're technically bearish because we've broken structure here. But when you look at the overall structure, this is a low and this is a high. So this is actually a kind of just retracements. This is liquidity drawdown in here. Your low is here, your high is here. So actually, this is where a lot of people get confused because, they target this area here and they look at this. They draw out the charts and they see that we've broken structure, so they assume it's bearish. However, the appropriate way to draw it would be like this. So we've made a high. Now we haven't broken below this low here. So that being said, now what I am looking for is for price to push higher because we're now at a low. So I'm actually expecting price to take that liquidity out. So I am actually bullish on the higher time frames. Now when we go into a weekly, it might look a little bit different because that there's the low right here and that there's the high. We did break there, so we did come lower. When I look in, so this is the low of the monthly candle with the liquidity that's been drawn out. I can now go to the left. I can see what's happened. We've kind of reacted from this last down candle. So that there is your reaction candle. That's your institutional area within this whole entire order block right here, which is really nice because it did take out a lot of this, liquidity right there. So you can see that there. But also one thing it has given us is more liquidity to the downside. And what we're doing, we are looking for liquidity. Okay, we can see liquidity laying there. We can see liquidity here. But because we're on a weekly, we're not looking for this as a threat. We're not threatened by this at all because we're only on the weekly. We look at this for future targets. That's why it's worth noting. Future targets. Because we're not going to get any sells targeting there long term at the moment. Okay, we're not going to get any of that at the moment, but we're reacting. And whatever happens in here, because you can see now what's happened. We've come into this order block right here, and we are starting to react. Now, I still think this is going to be a short-term reaction. I think this is a short-term reaction for price to eventually just push higher and attack that liquidity, which is resting right there. So I'm not really worried about being in that order block there because overall, like we said, on the monthly, we are technically bullish. This is the low, this is the high, we're in there, we're pushing, that's the liquidity. Clear targets. That there is keeping things super, super simple. So down to a weekly, we can then move into a daily and we can see what price is doing from here. Now, very, very aggressive gold has been, and that again, as mentioned earlier, is all to do with the time of year, seasonality. Okay, so it's very important to understand that price might not come down to this low here. In the form that we are pushing higher, it might not come down here. If it does, it will probably come down at a speed with news, meaning it will probably break this area here because there is a lot of liquidity being built up on this trend line. So you actually want to kind of hope price doesn't come down here. You want to hope price just carries on walking its way up because if it does, it's going to be high news volatility that comes down. So very important to kind of work out your trading range. So to do that, I'm actually going to go into a 4-hour time frame because this here is not an attractive time range, trading range for me. So as of now, we are pushing higher. We've built up some liquidity in this form here. What can we see if we dive a little bit closer to it? We can see that, we did technically grab below it, but at the same time, that can be seen as equal lows. So we've got some liquidity being built up here. We've come down, we've respected the levels, we've pushed higher, we've come back down, we've mitigated, we've pushed higher, we've come back down, we've mitigated, we've pushed higher. So now my key area, my point of interest, which is what I'm going to focus on here, will be that candle right there. So I'll be potentially looking for price to come into here and press higher, targeting that liquidity. Now, should price decide to come lower, I still would be looking for long-term buys. I would just assume we're coming maybe for this liquidity, and actually what we might do is something like that. So it's just a case of being patient, looking at what's going on around you. We're not going to take our entry on this 4-hour candle here. Okay, we're going to come in and have a look at the 1 hour, and we can quite clearly see, if I measure this entire trading range here, it's below 50%, meaning we're in a discount level. If you don't know discount levels, again, there are videos in the Telegram group. If I update it, that there is in my kill zone, 71%. That is my sweet spot for my trading areas. So that is an optimal trading entry level. That there is where I'd be looking for price to come back on maybe a 15-minute time frame. And, you know, I want price to come in and I want price to accumulate to actually push higher. So I'll be looking for something like that on a smaller time frame. Okay, this is what I'm looking to do. Now, at the same time, that doesn't have to happen. And the reason I'm not going to get in on the 4 hour is because, you know, if price just carries on doing this, then we're not going to sell. That's the beauty of the way we trade. We always look for evidence. We wait for that and then we do that. Okay, so it's very important that you make sure you be patient, because if price does accumulate in here, it's probably going to give us accumulation to the upside. And we have got short-term targets. So this high here, this high here, you know, this high here. So that there really is. And if you notice now, guys, we've gone from the monthly. In fact, we've gone from the 12-month candle, the 3-month candle, the monthly candle, all the way down to the 15-minute candle. And at the moment, because we're looking in here for an opportunity, there's no real need to go any lower than the 15-minute, because what we're wanting to see has not happened yet. Has not happened yet. Now, what you could do, hypothetically, is take a counter trend sell. You could sell into this area here, and your short-term target will be here, because this is where we want price to go. But to do that, you need liquidity draws. You need price to take liquidity draws on the way down. So I can notice here that we've actually come into this order block here, and we've reacted. So this here is my point of interest on a shorter time frame sell, because we've also taken out this liquidity here. And because we've taken out this liquidity here, we've started selling off. So now it's actually appropriate where we can potentially start looking for sales. So looking at a 5-minute area, you know, we broke structure and we came back down, broke structure, came into this candle here, pressed down. It's come into this imbalance perfectly up to this candle. You know, I'd be paying attention to see what happens in here now. You know, getting a break below might mean we can definitely get some counter trend sales coming in. But at the same time, you know, it's about patience. And the only thing I would, you know, like to give you a highlight of is that we are creating liquidity and you are against the overall time frame. But, you know, this could be your 5-minute point of interest area. We could sell off. We aren't at the moment. We are in this counter trend up, but it is creating a nice flag. I would actually want it if I was going to predict price action, which no one can predict, by the way. I'd want price action to come higher into this area here and then give us a nice aggressive sell-off coming lower. Gives us a nice aggressive sell-off coming lower. I'll then look to get in on a sell down there. My target would be this here. So that is a potential, you know, just targeting there. That would be potentially, you know, a 20 to 1. If you're taking there an 8 to 1, you're risking 1% on your account there. That's 8% gain on your account. If you're risking 2%, that's 16% on your account. But that's not to mention, guys, we're potentially in for an opportunity for buys in here. You know, all this selling analysis we've done up here is actually to take price down here to take a long-term buy to the upside. So to take a long-term buy to the upside, where is your first target? It's obviously going to be here. But if we go back up the time frames, you know, we can start seeing this huge liquidity. You could potentially be looking at a swing trade on an intraday time frame. That there can take you from, you know, that can take you to seriously good places money-wise. But it's about knowing when to get in. And at the moment, you know, nothing's happening for us to get our, you know, smart entry. So, guys, there's your top-down analysis for gold. If you have any questions, please, you know, put some comments in and I'm happy to answer them. But yeah, I'm happy to do some more areas. I'm happy to look at some other charts. If anyone's got anything they want to look at, just let me know. But well done, guys.